Hey guys, Lancy here. Hope everyone's doing well. Thanks for joining me and looking to some more MTG and markets. Now, I am going to preface this with what I'm trying to get everyone that listens to this video is bigger than just the magic market. It's bigger than just any specific market. What I'm trying to get everyone to look at is collectibles is one part of the economy and not a large part. It really depends on what happens around the world. So when we look at revised edition, cards and know that I'm looking at one of the most liquid assets as far as Magic is concerned, that doesn't really help us understand what's going to happen for the future of Magic overall because it's still limited by Magic. We can say that Wizards of the Coast has done a bad job, but could we have said in 2021 that Wizards of the Coast did a good job? I don't think we could say that. I truly don't think that we could say that. They did not release any new information about reserve list cards in 2021 that I know of. Something changed the markets in Magic and made everyone get a lot of attention to them. And what made the biggest impact is the monetary policies of the world. Now, the reason why I'm bringing this up is I had a video up a couple of days ago which said that the market was hitting a top. There is still no confirmation that it has hit the top and is going to go a long way down, but we have had a quite forceful bounce from that peak of this rally in the S&P 500, which is the largest index fund in the index stock market in the entire world, and it's moving lower. Another thing that this channel tries to talk about is the wealth effect. The wealthier that someone feels, even in paper assets, the more likely they are to spend more money by borrowing or getting rid of their savings because they just feel wealthier, even though that money is not actually captured in anything and it can disappear as fast as it came back. A lot of people want and enjoy that feeling of wealth. Now, the reason why I'm saying this, we've had this downwards trend line for the better part of 2022. Pretty much January of 2022, we've hit the peak and we're on the way down. The last couple of days have been very, very aggressive. But the FOMC, which is the Federal Reserve Committee, came out yesterday and said a lot of things that were still very negative for the markets in general, and that is going to carry over to the reserved list cards as well, especially if people over leverage. It's impossible to know how much leverage people are in. Over leverage pretty much means borrowing beyond your ability to pay it back, and that usually happens when interest rates go up, which they did again in the US yesterday. If you like these kinds of videos, please like and subscribe. The reason why I'm saying to just like in general is the stuff I'm going to be covering is not going to be what normally is covered by a lot of the other YouTube channels. I guess maybe Rudy does, but I'm not going to be talking about any specific topics. What I want to do is I want to throw out this information of the world's economy and also how it's going to impact collectibles in general, including Magic cards. Not just revised reserve list cards even. How it's going to affect Magic as a whole. How low can Magic stocks go? It's all combined. Housing, cars, it's all controlled and combined in this package. We're going to have to figure out what's going to happen in the future by predicting or seeing the past. So what has happened? The FOMC came out and said the job market in the US is very, very strong. And because of that, we're going to increase interest rates this meeting. And based on the data that's going to come up in January and February before the next meeting, we may or may not increase interest rates again. Now, the markets are waiting for the Federal Reserve to pivot, which is to reverse the interest rate hikes so that they can go to the moon. They didn't get that confirmation yesterday, and they also closed behind some very key parts of the market. another thing that I want to look at is what is going to happen with the S&P 500 futures we'll have in the background. So I want to cover a few things in the market, and then we'll go and look at the revised edition and see what has moved in the last couple of days. So S&P 500, it has hit a downward trending resistance line for, what is that, 1, 2, 3, 4, 5 times now, and has gotten rejected off it. If it goes above this line, goes up, bounces, and goes off, that is confirmation that this market will go higher. Right now, it looks like it's actually confirming the exact opposite, except for the MACD, which is turning to the upside slightly. But it is below the 200-day moving average and the trend line, both very negative. Gold is another one to look at. Gold is above the 200-day moving average, but it is still way lower than its peak, and it's below the $1,800 support. Gold is looking like it's telling us that the dollar has a chance to break out from where it is right now, and it is also very weak on the RSI as far as lower lows on the RSI, which is showing weakness. The MACD is also overbought and very stable. But when prices go up and the RSI goes down, that shows that there's a chance that gold can break down. If it breaks below 1700, it has a long way to go. Gold could easily drop by 10% in the next couple of days based on what the Federal Reserve has said in the last couple of hours, or let's say 24 hours. Another one that is not looking good, and certainly probably will not look good for a long time, is Tesla. But Tesla is about to hit some support. If it drops down by another, that's still another 15%, but if it drops down to another 15%, it's got a lot of support. Yeah, there could be some buying here, but it's no guarantee. Tesla is quite weak, just like all the other EV markets are weak. The VIX is looking pretty weak. It is looking like it's about to fall over. But it's important to remember that the VIX was going up while the markets are going up. So there's no reason why the VIX can't go down while the markets go down as well. US 10-year, it is pretty stable for what it is. It's flatlining on the MACD, and it has a chance to move up higher on the RSI. So another showing of strength for inflation. And that means that if the inflation goes up, the Federal Reserve has to be more aggressive. US AUD and USD, Australian dollar and the USD, it looks like it's hitting a peak, and it's probably going to come down. Apple, once again, doesn't even look like it's hitting a peak. It just looks like it's about to fall over. Oil, very weak. I would actually expect it to go up a bit so that it can actually bounce from a higher level down, but a lot of people are just fighting it all the way down. Another one is the Australian ASX 200. It looks like it's falling over, but very slowly. That may take its time. Copper, Dr. Copper hitting its head on the 200-day moving average. Very likely chance for it to drop all the way back down to its lowest low of another 20% drop. These are all some pretty big moves. The only reason why it hasn't moved down that much is because a lot of people are very bearish. But it seems after the Federal Reserve meeting that we just had, that they kind of have a right to be bearish. Let's have a look at some big ones. So what do we want to have a look at? Hasbro. Let's have a look at what Hasbro is up to. Hasbro is below 60 and does not look strong at all. It is very stable, but then again, the market itself was stable. There is a pretty high chance that Hasbro will go back and test 55. And oh boy, it might actually break the monthly. Might drop by another quite a bit of percentage. If Rudy cared about Hasbro at all, the amount of stocks he has, I would recommend that he get out. But then again, he bought at 70, so maybe he just wants to hold and keep going. But sometimes you got to cut your bags loose. And that's something that I guess Rudy and a lot of people never had to learn, because after 2008, they only needed heavy bags to get way ahead of almost everyone else. It's one of those things where if the Federal Reserve is your friend, you can get pretty far. There is a saying that says, don't fight the Fed. So, if you're going to want to fight the Fed, then it's going to be tricky. Anyways, that is the market as a whole from what I can be bothered covering, mainly because I don't think it's exactly what this channel is meant to be about, but I wanted to cover some of the bigger hits in there. The next thing I want to talk about is revised edition. So if we look at the daily movers, not really that much negative, but it is more negative on the downside than it is on the upside. So you got the Underground Sea dropping by $12.51, which is 2% drop. Tropical Island 2% drop. Badlands 2%. Tiger 2%. Fast Bond 3%. Well, 1%, 1%, 3%. So nothing too crazy right now. But what I'm saying is, in the US at this point, you can get a online bank that to probably pay you around about 4.5%. And in other ways, you can actually get $10,000 put into other things, locked away for maybe even a year, giving you $700 for that year extra than if you didn't do that. And those kinds of trades will make it very hard for you to hold on to Magic products because you're getting 4.5, 7% a year, while everything else is having trouble moving up. So it's very important to remember that while it might feel like you're losing money because of inflation, it really depends on what you put your money into. You can also put your money into other things, but I'm not going to give financial advice outside of, just do what you're comfortable with. But when it comes to reserve list cards, while there may be blood on the streets soon, I feel like after what the Federal Reserve just said recently, we're going to have to see if job losses actually go from 3.7% in the US to what the Federal Reserve wants, which is around about 4.5. And I doubt they'll ever make the mistake of saying that full unemployment is less than 4.5, because when you get full unemployment less than 4.5, you get very strong inflation, because a lot of people are fighting for there's a lot of jobs out there for less people, which means they can really get themselves to charge prices for their labor, which is a good thing. But then more people have more money to spend, which causes inflation and then causes a cycle that the Federal Reserve is trying to break right now. Anyways, guys, if you like these kinds of videos, like and subscribe, and let me know what you think down in the comments below. See you guys next time.